So when it comes to buying gold bullion, there are many options out there, all the way from 1 gram up to quarter grams, half ounce grams and more. The question is though, what should you buy and why should you buy it? So buying small gold is a very popular topic with investors regarding the yellow metal that is gold bullion. Specifically today we're going to be talking about 24 carat 4/9 fine gold bullion minted from the Perth Australian Mint, the Royal Mint and PAMP Swiss. So what is fractional gold? Well, to start us off, fractional gold is everything that you can see in front of you. We've got a 1 gram gold bar, a 5 gram gold bar at the back here, a quarter ounce gold coin and a half ounce gold coin. So really nice variation of fractional gold bullion. Now fractional gold bullion is anything below 1 ounce. So what are the prices? Well, that's what we want to know the most usually, isn't it? So starting off, if you're looking to buy a 1 gram gold bar, you're going to be looking between £55 and £75. Now, all of these prices I'm giving you a guide of is buying new direct from bullion dealers. You can find cheaper bullion elsewhere, but we're specifically in this episode talking about buying direct new from bullion dealers. So going back to it, this 1 gram gold bar will set you back between £55 and £75, depending on the brand and where you buy from. Moving up, we've got the 5 gram gold bar in the back here. That's going to set you back between £250 to £300. Moving down to the bottom left here, we've got the quarter ounce lunar dragon coin. They're going to set you back between £430 to £460, again, depending whether you're buying premium or standard weighted bullion. And moving up to the top left here, we've got a half ounce lunar dragon coin. If you're looking for half ounce bullion, it's going to set you back between £850 to £900. Now, these prices do, of course, vary depending on the pricing of the gold market at the current moment of time, and also it depends on whether you're buying premium bullion or more generic weighted bullion. Now, premiums, how do they work when it comes to fractional gold and why are they so important? Well, fractional gold has a big issue with premiums because you're buying smaller weighted bullion. The bullion dealers tend to add more premiums onto those items to inflate their profits. That's how they can make more money. Now, of course, that gets passed on to the buyer, unfortunately, making them a slightly less lucrative investment than buying something like a 1 ounce gold coin or bar. As I say, the reason for this is because there's more minting costs when it comes to minting fractional bullion. So therefore, they have to pass on those costs by adding premiums onto either gold coins or gold bars, which is then passed on to the seller. Now, I do believe that although some premiums are slightly too high, more specifically regarding, let's say, 1 gram gold bars, I think when you start moving up in the weights to 5 gram, quarter ounce, or even half ounce, those premiums start to become a lot more interesting and a lot more appealing, because it tends to happen with gold bullion when buying it, the bigger you buy, the more bang for your buck you get. So I will say, if you're a new investor looking to start investing in gold bullion, try not to get too caught up in the premiums. It can be a little bit off-putting, but I honestly believe it's great to just get your foot in the door. Most of us gold bullion stackers started off with the very famous 1 gram gold bars that you see today, and we then moved on to 5 gram, quarter ounce, sometimes half ounce, and all the way up to 1 ounce and more. So it's a real progress and journey. So I would say be aware of the premiums, but try not to be put off by them. Now, fractional gold is very liquid, and that's why it's so popular. So moving on, let's talk about the liquidity of fractional gold. Well, For example, say you invest in a 1 ounce gold bullion coin. Not only are you investing an awful lot of capital into one single item, it's a larger piece of precious metal, making it harder to store, and it means that if anything was to happen to it, there's more risk in losing the value in that specific coin. But with fractional bullion, you're investing smaller fractional amounts of capital into those bullion investments. Not only does that make it safer because you're spreading your risk, it also gives you the opportunity, if you need cash flow, you can sell off, let's say, a few 1 gram gold bars or maybe a few 1/4 ounce gold bars, gold coins, and you don't have to break into that big 1 ounce bullion that you've purchased. So fractional gold has a real big plus for liquidity, being able to rejuvenate capital into your pocket without breaking into bigger investments, but they're also very, very liquid in the terms of storing and moving them. So overall, should you buy fractional gold, or as we know, small gold? I think so. I am no financial advisor. I'm just somebody who's been investing in precious metals and vast range of other investments over the years. But I've got to say, I really do love fractional gold bullion. I think it's a massive part of a portfolio. As I say, I love its liquidity. I love how you can spread your money across multiple ranges of investments without spending an awful lot of money. However, something to mention is there is obviously capital gains tax to be aware of. That is a different topic for a different video, but in a general rule of thumb, I think it's a safe long-term wealth plan and investment, and I do believe it's better to have some gold rather than no gold. So I hope you enjoyed this video on should you buy fractional gold and buying small gold bullion. I've enjoyed it. Please let me know if you have, and I look forward to seeing you in the very next episode. Thank you very much for watching, and I'll see you next time.